Sunday the 2nd of September. Looking at the US dollar index chart for the week starting 3rd of September 2018. So we broke in the beginning of the week, we broke down below the support at around the 94.90 area. I thought that was it. We were going to continue lower, but the market just traded sideways in very slow conditions. Very low volume at the end of August. Well, that is normal, unfortunately, for this time of year. So we did hold Tuesday, Wednesday and Thursday. We did hold perfectly at that 94.90 resistance level. Certainly worked as a scalping level. If you were in and out at that index, selling and then buying on the dips, it worked. But if you were holding the short on a swing trade position, which I did think was the right thing to do, it certainly didn't work, because on Friday we rocketed back up through the 95.00 area. Now, the index was very oversold. I didn't see that as particularly important, because we were holding below not only the trend line, but the 55-day moving average and the fib level, and also the previous the low for the previous week. So it all stacked up to suggest that holding below 94.90 would be negative for this week. Anyway, it wasn't. Now we're back up. So the fact that we're back up through that level, I have to assume, is bullish. We have positively the slow stochastic is positive now as the blue line crosses over the red line and heads back up through that 30 level, or 20 value line, I should say. I don't like this very much. Really, it's just trading sideways. So trying to make something out of this direction is maybe I'm trying too hard, looking for a swing trade, but I would have to assume the dollar outlook is more positive for this week anyway. We've got the 100 and 200 week moving averages around the 95.50, 95.60 area. So that will be the next barrier for bulls. Get up through there and it should clear the path. You can see we've also got the 500-day moving average up there, the green line. 23.6% fib in the shorter term there. That actually held perfectly the week before last, when we did have that bounce, and I didn't expect it to. And that's why when we broke through here, it looked so negative. Anyway, August is a horrible month. It always is. So is December, of course. But I've got to assume that the dollar will go higher. So the Aussie dollar is clearly in a bear trend against the US dollar, and certainly that continued most of last week, with the Aussie dollar reversing the 55-day moving average, really doing its job there actually. So now we're back down to test this trend line, which goes back to the beginning of May. Seems to be holding at the moment. It's not the strongest of supports. That short-term trend line I wouldn't necessarily trust. If we break down below 71.52, well, we're not that far away from it. We've got to 71.74. That's the next level to watch. 71.52. Break below there is obviously negative. That's the 2016, late 2016 low anyway. But yeah, I see no reason why the Aussie dollar should turn around and rally against the US dollar. And it's pretty much the same for the New Zealand, the Kiwi. They've both been weak. Neither of them managed to rally when the dollar looked weak. The euro was the one that was the pair that benefited the most from that dollar weakness in the middle of last week. The New Zealand dollar didn't quite make it to our selling opportunity around the 67.40 level. It got to 67.26 and then reversed, and this does look negative. Obviously, we haven't retested the August low the way the Aussie dollar did, and in fact broke the previous August low, but I still think this looks pretty negative on the weekly chart. What does that show us? It just shows us the rejection of this trend line going back to the middle of 2017, coupled with that 61.8 fib resistance at 67.39. So not a huge surprise that we didn't make it and reverse from 67.26. Outlook negative for the New Zealand dollar. Yen I haven't really enjoyed for a while. It's really not giving me any clues. This is the weekly chart, and as you can see, it's just a mess. Big sideways thing going on here. No patterns, no trends, nothing for me to follow in the longer term. In the shorter term, it looks like we've broken up above that trend line, got through these moving averages, got through the previous high at 110.97, was looking good. But for some reason, even after this big blue candle, we reversed from 111.82 and then dumped. Don't know what's going on here. Really have no opinion at all on the dollar yen, I'm sorry to say. Having said that, I think I'm right in saying the scalping levels did work on Friday. This is the euro yen, and I think these scalping levels worked as well. If you're jumping in and out looking for 40-50 pips or something. But look, this is just one big sideways movement over the summer, well, since May. So there's nothing to give us any indication of what can happen next. You're getting these big moves up and then you're getting these big red candles. So I don't know. Are we just going to reverse that whole move the way we did in August? Big move down, big move up. Maybe we're going to get a big move down. I really don't know. We are overbought on the slow stochastic. Weekly chart, again, not really telling me anything. Okay, this is a negative trend just, but look, I just don't like it. Let's look at something else. Let's look at the euro. So the euro had a real nice bounce when the dollar weakened. This is a nice bullish pattern here. Big red candle followed by the hammer, and then the big blue candle. Forget what it's called. You know, I don't know the names of these things. So you would have thought we'd got some positive follow through last week. You really would have done, and we just didn't. We couldn't even test the 100-day moving average, and then we just reversed. Messy, just messy. We hit this sort of net of price action here and just reversed. So it doesn't look too good. We couldn't sustain a rally. My best guess is that we head lower, but I'm looking for a swing trade opportunity, and they're just not there, not from what I can see. So again, I think the scalping levels worked. I think once we broke the 1650 116.50 support level, we went straight to the next target, which was down at 115.90, 80 or whatever it was. So, you know, at least when you do get the moves and you do get the breaks, there is a sort of 50 pip move there. So there's enough to make some money, but you're going to have to be nimble. You've got to get out. You've got to get in. You've got to trade the levels. You've got to keep your stops tight. I don't like trading like that. I'm lazy. I like to find a swing trade. I like to stick the swing trade on, leave it for 2 or 3 days, you know, and nick 100 pips. But I just don't see those opportunities at the moment. So dollar CAD, dollar Canadian. There's the levels haven't really changed. I mean, as you can see from the weekly chart, we've just been going sideways. On the daily chart, there's been a little bit of a downtrend over the last 2 months. I think the levels have been working quite well in this market. And then I'm just sticking with them really. If we get up to the 131 area, we want to be selling it around this trend line, of course. We've got some congestion here with moving averages in the middle. And if we manage to get down to 129, 128, sort of 70, 60, that should be a good buying opportunity. But a break below the 200-day moving average, which is at 128.40, would be a sell signal. And I think that there's just a big gap down here. There's not really anything price action wise to stop us getting down to 127.38. 127.25. So there's some scope for the levels are worth trading, and when you do break or when you do hold a level, you know, there will be a good 50 to 100 pips profit in the trade. So again, look for the scalping opportunities. Pound, I'm not going to bother showing you. It's just a matter of trading the levels there. Again, I've got no swing trade opportunities in that one. Right, gold was horrible on Monday, Tuesday, when we spiked up to 12. No, it was Tuesday, wasn't it? We hit 12.14. Totally didn't expect that. I really thought this 12.08 level would hold. More importantly, that level is shown on the weekly chart with this 13-year trend line up here. So, well, we have rejected it. That was a false break higher on Tuesday that messed me up. But I know that some of you were still getting in there and selling it around 12.07, 12.08 for the rest of the week. So that did work. And it looks like we should go lower now. We have rejected the trend line on a weekly basis. That false break up in the middle of the week. You know, I would have needed a weekly close above there, and we certainly didn't get it. So I think gold goes down. That does look likely. And when you look at the silver chart, the whole thing's pretty negative. Where are we? There we go. The silver chart's just negative. Goes down, it consolidates, and then it starts a new leg down. There's absolutely nothing telling me to buy this. So silver, if anything, looks more negative. We're way below the trend line now, and if you've been holding shorts, or if you managed to set it up around $15, well done. Probably worth holding on to that. Oil's got very overbought on the daily chart, on the stochastic, as we approach the previous highs in July of 71.05, June of 71.29, May of 71.63 for the October contract. So this is called a bearish harami, where you get the blue candle followed by the doji, or the sort of, or the inside day at least. You know, after some good solid blue candles, you would expect to see more blue candles if the bulls were going to remain in control. They clearly are not remaining in control after this on Friday in severely overbought conditions. As we approach previous highs, there's obviously some caution. So just be careful if you are a bull. We may see some profit taking in oil, but there's no strong signals. And when you look at it over the, you know, like so many markets over the last 4 months, we've only traded sideways. So again, really just looking for short-term scalping opportunities. I can't suggest a short without something, you know, without a stronger sell signal there. E-mini S&P, well, it's all down to the trend line. I'm not putting that on the screen very well. Let me try that. Oops. There we go, that's better. There's the channel going back to April. Now you can see we had a break up through there. Middle of the week, we got up to 29.17. I thought that might hold, but it didn't. And we reversed very quickly the following day on Thursday. And then Friday, of course, we couldn't manage to get above that trend line. So my concern is that the index will see a bit of a correction. We need the correction. We're very overbought. I'm going to show you the Dow chart. Here's a good reason why the S&P could head lower. The Dow chart held the trend line perfectly. And big red candle Thursday, followed by the doji on Friday. So I think this indicates that the US stock markets could have a decent correction, ease these overbought conditions. I'm not talking about anything more than a short-term correction, but just watch the downside there. It does look likely we will head lower this week. Labor Day holiday, I think it is on Monday, so it's going to be dead. And then everyone's going to be focused on the non-farm payroll number on Friday, so it's going to be pretty slow, horrible week next week, I would imagine. Don't get too involved. It has been a good year for us. We have made some money in the months before August. July in particular was a good one. So I'm hoping that these conditions return. As long as we get some movement, I'll continue to hopefully pick out some good swing trades, and we can try and make some money in the run up to December.